All right, folks, welcome back. This is the Monday, August 30th, 2021 commentary for the ICT Mentorship. Just as a reminder, there hasn't been a video posted for the last few days or weekend commentary. I've been in a lot of pain and I've just not been up to doing it. So I'm going to go through today. Hopefully today's video will be insightful nonetheless. All right, so we're looking at the dollar index as our daily chart. You can see we have our buy side imbalance, sell side inefficiency here with this candle. And the last up close candle, bearish order block. On Friday, we've seen price run up into that, and then it collapsed into buy side imbalance, sell side inefficiency. This area right in here still looks like it's probably going to be the draw on liquidity. And ultimately, maybe even run below here. Now, I mentioned on last Wednesday's video, which should be the last video you have on your forum. So a couple people were actually emailing, asking if there was any other videos, if there was an issue with their account. No, I just haven't been able to do any because I've not been feeling up to doing it. It hurts just to sit here. So the other day when I gave a long-winded discussion, most of that was me laying down. So that's why I was more or less wordy. A little bit more comfortable doing that, but sitting up doing the charts and such, it's a little bit more uncomfortable. All right, so I mentioned on Wednesday that we would probably see the Jackson Hole volatility event send it lower and make an attempt to run into this low here. Didn't quite get there, but we did get the sell-off. So I want to go into a little bit of the Friday run up into the bearish order block, but just be mindful that this red line here will come back in on the chart when we get to the hourly time frame, but it won't be there for the next couple slides. All right, so here's the 4-hour chart. It's a naked chart, and you can see how we dropped in here. We opened on this candle, rallied up, filled in some of this downside, delivery on price. And the next candle we open here, trade back up in, completely overlapping the body of this candle, and then closes lower. And open, trade back up into the previous body's candle, trade lower. We consolidate, we come back up in for our institutional order flow entry drill, sells off once more, then consolidates, goes back up into the fair value gap, trades lower than the previous low again, and then back up in on Friday, relative equal highs, trades back up into the SIBI, sell side imbalance, buy side inefficiency, then sells off back into that daily discount low of the buy side imbalance, sell side efficiency on the daily chart. So it's in this range here that the market reaches up into, completely closes that in, then on Friday the displacement on the downside. You don't see the levels on the daily chart. There's big blue thick lines ahead on the daily. They're not on here because I'm drawing your attention to this right here. Okay, so we reach up into a premium array, then displacement lower. Now refining the imbalance from a 4-hour down to a 2-hour, you can see how we have that candle's low and this candle's high. It's obvious, it stands out very clear with this one single candle movement defined by this candle's high and this candle's low. Now contrast that with this candle's total range and the next candle's total range, and then we have a higher run institutional order flow entry drill, then sells off, and then this range here, watch what happens. It rebalances up to the order block and then goes back down, and then we have the range here and it trades back down. So there's a lot of back and forth. See how it's going back and forth, overlapping the initial delivery, going lower, then it comes back up, goes lower, comes back up, goes lower, but there's nothing here overlapping from this candle's high. It does a slight little return to it here and then trades down, but it bumps it here, sells off, relative equal highs. So there's what remaining above that. Buy side liquidity. So the market opens on this candle, sends it up into the 2-hour SIBI, sell side imbalance, buy side inefficiency, then strong displacement on the downside. So in 4 hours, this candle and this candle, both being 2 hours in interval, the entire range was delivered from here to here. Back into the order block, all of this remaining buy side imbalance, sell side inefficiency is rebalanced with this, and now we're just consolidating here on Monday. So let's drop down into the hourly chart, and again, that bearish daily order block level is now returned in the chart. So we run up into the daily bearish order block, but specifically back into the 2-hour sell side imbalance, buy side inefficiency that does not appear on this chart. You see that? So that's where we go from a higher time frame down. Now, when I'm doing commentary, for brevity's sake, I just focus on daily, drop to 1 hour, drop to 15, and that's it. The responsibility lies in your hands to go through all time frames and always refine the charts as much as you can from the higher time frame down, and you'll be able to pick out the levels that would otherwise not be so obvious here on the hourly, but is in fact very clear on the 2-hour here. See that? It's important to work from the top down, because that's our top down analysis. That's the importance, or the strength, if you will, of working from a higher time frame chart down to a lower time frame, because you'll be able to pull out where those actual inefficiencies are. And the market goes right back up into that beautifully, and then slants it back down into the discount low. This lower blue line is the discount low of the buy side imbalance, sell side inefficiency on the dollar daily chart. And this is the premium high of that. Delivered from a 2-hour sell side imbalance, buy side inefficiency, fair value gap, down to the discount low of a larger buy side imbalance, sell side inefficiency on the daily chart. So a premium array to a discount array. And finally, on the 15-minute time frame, you can see the buy side liquidity pool here, and inside of the range, and delivers right to the premium high of that 2-hour SIBI. And then look how fast it runs through, taking out sell side liquidity resting below these relative equal lows. Higher low to the right of the low here. So it's low resistance liquidity run signature, and a very, very fast market delivering price back down to the discount low, sweeping below it. And today we're in consolidation, so it's not really doing a whole lot. Euro dollar daily chart. We swept above this short-term high. This area in here still looks suspect, so we'll see what we get in regards to that. If we run up into this and close it in, and then we break below this down close candle, if it trades below on a closing basis, this to me will act as a inversion level. Notice we're at the 117.50 level as well. So if it trades down below it and comes back up into it in this range, the low or open with the 50 level, there's a lot of things converging there. That would be bearish in my mind to send it lower. Otherwise, how we trade here, if we go through it and come back down in, offering support, then we're going to be looking for a run here and lower dollar, and then consider this area up in here and above the short-term high. Non-farm payroll week, just the cosign, I'm favoring that it's probably going to go here for the week, but just remind yourself that it's non-farm payroll. I'm probably going to be wrong. Euro dollar hourly chart. bullish order block, fair value gap, trades down into it here on Friday, rallies. It hasn't been as precise as I would like to see euro, which is, again, why we're sitting on our hands. It's not, in my opinion, not a high probability period to be trading right now. And I know it's not what you want to hear, but it should be something that you're welcoming as a developing student and analyst, because you want to be able to know why you're likely going to lose money if you go into the marketplace, and where your analysis may be looking for things I'm teaching you, they may not actually be in price at the moment. So you can end up becoming confused or fall victim to wanting to see something in price that really isn't there. And dropping down into euro dollar 15-minute time frame, you can see Friday's run here. This is a really sloppy consolidation, but overall it looks like it could drop back down into this area here, run some sell side, and then continue higher. That would be in line with a lower run on dollar as well. Finally, pound dollar daily chart. I don't want to draw too much on this one because it's really in a large trading range. The only thing I see here is a bearish order block with a fair value gap. We can run up into that and then come back down into this area here. And if it would accelerate through that, then below this low, and then obviously that would clean up the sell side below this low and this low. But it could do something like this week. It could go up in here, hit the order block, then sell off, take the sell side here and trade back down in here, and then still ultimately go higher. Just to upset the underlying sentiment that's in the market if it does those runs on liquidity. It's trendless right now. It's range bound, and it's very, very low probability. So that's why you're going to see basically a naked chart here. British pound versus US dollar hourly chart. We've taken sell side here. We came back down into this area here, which doesn't look like it has any imbalances here. But we're going to drop down to the 15-minute time frame and you'll see it. But it looks to me like we've taken sell side, ran above short-term high, retraced for a short-term discount low, and then we'll look to see if it wants to rally higher. There's buy side resting above here. So if we do get that sell off on dollar, this could again run up into that 138.80 level. So about 100 pips or so. All right, pound dollar 15-minute time frame. You can see we had the buy side imbalance, sell side inefficiency here. It opened, had an immediate rebalance, and then rallied. This imbalance can still offer support for a return to a discount, come back inside this range again, and then send it higher. There's buy side liquidity resting above here, and it's building. Every time it takes a short-term low out, that gets traders thinking it's going to go down, and that's probably not going to be what we see, because everything is range bound and cable right now, and we've already seen multiple runs on sell side through all the time frames from the daily to hourly, and in here we can see we already went down here, but we're leaving relative equal highs here. So to me it looks like it may want to work its way higher up into that Tuesday, Wednesday time period. If the consolidation continues into Thursday, Friday, then the event for non-farm payroll will be the run above to take the buy side liquidity there. So it's kind of like what I would anticipate and how I do my study / analysis on weeks like non-farm payroll when I'm not actively trying to trade because it's low probability. And that, my friends, is going to be it for today. I appreciate all your patience, and for the most part, not anyone really getting too worked up or animated because I've injured myself and I've not been able to put out the same level of content that I've been doing for months now. So I will be back, Lord willing, tomorrow, with another lecture and analysis video. Until then, be safe.